Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
18. Let's rewind to what took place yesterday on the last trade. It was a range-bound day of trade. Indices rallied in early hours. There was some short covering, but then ended off the high point of the day. The Nifty managed to hold on to the 10,150 mark, did not manage to hold on to the 200-day moving average. The Sensex, while it rallied 150 points, did correct about 200 points from the top. If you take a look at the Asian markets right now, they are absolutely green. Ekta, what does today indicate?
Well, like you mentioned yesterday, just to point out, it was a market where we were unable to sustain gains. The Nifty managed to end or eventually ended below its 200-day moving average. The advanced decline ratio reversed by the end of the trading session. So it turned out to be a market which was a bit sluggish by the end of trade. For today, obviously, the market is going to be reacting to the Fed meet. It was Jerome Powell's first meet as the Fed chief, and he raised rates, which was as expected, and the forecast is expect a total of 3 rate hikes this year. And however, they've upgraded their economic forecast going forward. So largely, it was an in line with expectations kind of Fed meet, but the US markets did end a little lower, like you can see on your screen. We had Asia, which is largely in the green today, so that should come up for you. Nikkei, which is up 0.8%, Hang Seng or the Hong Kong markets, which are reacting steadily as well. And overall, the SGX is also indicating that maybe we could start in the green this morning, so it's up around 50 odd points. So that's where we're placed with regards to Asia as well as the SGX. A positive indicator. Now, however, one thing that I'd be watching out for closely is Brent crude. There are fears that the US might impose sanctions on Iran. There is that Saudi Arabia meet which is taking place in the US right now. So there is some concern about what could happen with Brent crude. Like you can see, it's almost touching $70 per barrel as we speak. The recent low for the Nifty, which was at around 10,050 odd, would be something that the street would watch for in terms of being protected at lower levels. The 200-day moving average, obviously, and whether we can move above that would be something that the street would watch. And another level to watch for, more sentimentally than anything, would be the 33,000 level on the Sensex. It is the Nifty bank option expiry today as well. And separately, if you're talking about flows, the FII's net bought around 98 odd crores, which is positive. I think it's the 3rd consecutive session that they've bought in the cash market. So that's a positive. DII is also net bought around 198 odd crores in yesterday's session.
All right, Ekta, stocks?
Well, a lot of stocks in focus. So I'll start with Sun Pharmaceuticals, where they have received that US nod for tildrakizumab, which is basically for moderate to severe psoriasis. It's a big milestone approval for them because it marks their foray into the branded specialty segment for Sun Pharmaceuticals. Obviously differentiates them from what is happening when it comes to the core generic pricing pressure in the US market. Binani Industries has clarified on news there was no application copy served to the company. No question of fraud arises, as all accounts of the company are audited. There was some clarification from Axis Bank also. They're seeking clarification from TDSAT, and the bank will comply to all directions with regards to bank guarantees issued to Bharti Airtel. And they have mentioned that there is no exposure to SL. ICICI Securities IPO opens today, so that'll be something to watch. Dilip Bilcon, L1 bidder by NHAI for a new EPC project. NMDC with regards to a start of power supply to coal handling and HT power for coke oven battery at its upcoming steel plant. Zenzar has made a small acquisition, so that stock is in focus. GE Power has received a contract from NTPC, and Jindal Drilling and Industries is in focus, as well as Oil India. On account of separate piece of news, Jindal Drilling is settled. There was a settlement done for an arbitration, and Oil India has signed an agreement for setting up a methanol plant in Assam.
All right, Ekta, thanks a lot for that. With that, we'll take a short break, come back. Now, yesterday, the government has approved the launch of the Ayushman Bharat scheme, loosely termed as Modi Care. Here are the top 5 highlights of this scheme. Number 1, the National Health Protection Scheme will have a central budgetary support of 85,000 crore rupees till March 2020. Number 2, the scheme will subsume the ongoing centrally sponsored schemes. Number 3, the NHPS will cover 10 crore families belonging to the poor and vulnerable population of the country.
Okay, and number 4, and this is the individual compensation bit. The scheme will give a cover of 5 lakh per family per year, and finally states will need to have state health agencies to implement NHPS, and a fund transfer to state health agencies will be done through an escrow account. We spoke to Vinod Paul, the member of Niti Aayog, who is also the architect of this healthcare scheme. Let's listen in to what he had to say.
About the issue of budget toward that direction, there will be increased need of budget. We are spreading this effort up to 2022, and whatever it would take would be made available, and that's the commitment of the government. It would be above 20,000 crore over this period of time, because we are talking about 1.5 lakh health and wellness centers, rural as well as the urban component of this. And typical cost that we estimate at this point in time is, something like 10 lakh, an ongoing cost, and about 7 lakh upgradation costs. And these estimates could be fine-tuned as we move along. The IT blueprint is being seen as 2 levels of activities. One, the immediate backbone, IT backbone for the NHPS, which can help us roll out immediately, which builds on the experiences of the states. And we are very close to a closure on that, and in a matter of weeks, that will be ready for scale-up. At the same time, we are building simultaneously a much more comprehensive health stack, which will absorb a lot of IT and digital health elements into it, in addition to be the backbone for NHPS. It will also connect to individuals and the families.
All right, so that was Mr. Vinod Paul, the architect of the Modi Care scheme. But keep an eye out on the Asian markets. We're getting early rates from Hang Seng as well as Shanghai. Both of them have opened up well in the green. The Hang Seng's up 140 points, the Shanghai up 0.2%, recovered from the opening lows. What does this mean for the SGX Nifty? A half century at the open. We'll keep an eye out on that, but take a short break, come back. We talk about Sun Pharma. It gets the much awaited US drug regulators nod for its specialty psoriasis drug. This is Power Breakfast. The stock in focus today will be Sun Pharma. Ekta, yesterday you had alerted us about the possibility of Tirakizumab coming by, and sorry to use a bad pun, the sun will shine on Sun Pharma today.
Yes, it will probably, be in the green. Not probably, it should be in the green, simply because this is a milestone approval for Sun Pharmaceuticals. While everybody is debating that, it is going to be a competitive market for them, they are probably going to have to prove themselves in the market with regards to safety. They're probably going to have to prove themselves as compared to other players who are more established when it comes to marketing infrastructure. The point is that they have managed another launch in their specialty segment. This is the 3rd launch for them in the past 18 months when you talk about their specialty pipeline. So it definitely is something which is a positive for Sun Pharmaceuticals. Now, obviously, it is a very competitive market that you're talking about, around 7 to 8 players. There is Humira, which is by AbbVie, which is already a very established drug in the market for psoriasis. But Sun Pharmaceuticals, trying to differentiate itself and now making that foray into the specialty segment so that it moves away from that core generic pricing pressure, will be something that the market is going to take cognizance of. Likely to target around 5% market share in the first year, rising eventually to 10% by FY22. That's according to some brokerages. And the peak sales vary. Nobody will know what the peak sales would be eventually. It depends upon the efficacy of the drug. It depends on how exactly it's taken. But the market is estimating that it could go anywhere between $300 million to even $500 million. So this is an important drug for Sun Pharma. It is something that the street was expecting. It is something which is a competitive market that you're talking about in their specialty segment. But the fact that Sun is differentiating itself as compared to its peers, its peers in the listed space in India, is something that the street will take cognizance of.
Well, thanks a lot for that, the competitive space, but Sun differentiating itself. Talking about competitive space, the cement space, that has heated up. In fact, CNBC TV18 has accessed the forensic audit report of Binani Cement by the Mumbai-based chartered accounting firm Hari Bhakti and Company. The report flags off transactions that it calls, and I quote, potentially suspect. These transactions were made between July 1, 2015 to November 30th, 2017. The report also flags suspected related party transactions. It says Binani Cement is yet to recover 487 crore rupees from SSPL against certain cement sales. Among other key observations, Haribhakti has highlighted an intercorporate deposit of 1148 crore rupees to the parent company Binani Industries.
Okay, and we spoke to Dalmia Bharat and Ultratech, the two participants in the bidding process of Binani Cement. Let's listen in to what both parties had to say on this.
We have already been declared a successful bidder. Our resolution plan has already been filed in NCLT. We could understand that there were suspicious transactions, and we could understand that there are certain receivables which will not come to us. All these have been considered by most of the bidders. Binani Cement might have thought that let us take the whole process out of it so that this investigation doesn't go up. And that's why they might have collided with Ultratech or someone. NCLT hearing is tomorrow, and maybe in one more hearing this conclusion can take place.
At no stage of the proceedings has RP ever shared with us any such findings pertaining to any fraudulent transactions which they might have discovered. RP is managing the company now for whatever last 7-8 months. Maybe they were aware of it, but certainly it was not put out to in the knowledge of resolution applicants, and certainly not in our knowledge. We cannot comment about other resolution applicants.
Do you think that the RP was not cooperating with a particular bidder and had vested interest in getting another bidder? I mean, what is your point of contention?
I have not made that, so let me explain to you. In this case, again, we got the best competition law experts to talk to the RP and to their advisors that there will be no issue around getting CCI approvals. We understand, again, we have been requesting, please share with us what has been the basis on which you decided that we are not H1. And not having got any response from the RP to this very legitimate request, we knocked at the door of NCLT.
Terminating the entire insolvency case proceeding against a company and paying off the lenders and buying a company. Is that a disregard to IBC law?
It is not Ultratech which is trying to take them out of IBC.
But you're backing Binani.
Please understand. Please understand. So let's understand, when you talk about, on the one hand we talk about law, on the other hand we mix parties, you know, at our whim and fancy. And that's the precisely the reason why there is so much of confusion.
There you have it. You heard it from Dalmia Bharat. You heard it from Ultratech. The gloves are clearly off in that space. But let's move on to a CNBC TV18 exclusive. After EESL, Tata Motors has won an electric bus tender under FAME, which is Faster Adoption and Manufacturing of Hybrid and Electric Vehicles scheme. Ronojay Banerjee is here with all the details. Ron?
Well, yes, after winning the EESL tender, Tata Motors has once again won an important electric vehicle tender, this time not for cars, but their electric buses. What we now understand is that 190 electric buses Tata Motors will be supplying out of the 310 that were meant under a specific scheme. Let me just take you through what the background to this is. In December last year, the government, the Ministry of Heavy Industry, had launched a multi-modal electric public transport scheme that was under the existing FAME policy, whereby which 11 cities were identified, wherein these cities would be buying electric buses. The cost would be sort of shared between the central government as well as the state government, for which the overall central government was going to spend around 437 crore rupees. This is pretty much on the lines of JNNURM, but of course much smaller in scale and scope. Out of these 11 cities, we are told in 6 of these cities, Tata Motors has won the bids. They were of course competing with Ashok Leyland and Mahindra, along with a Chinese manufacturer. What we understand is that Tata Motors' bid price has come in under 80 lakh rupees. So again, once again, quoting a price much below what competition had offered. When we contacted Tata Motors, they confirmed that they have indeed won. They've said that 62% of the total share of the business shares has been won by Tata Motors. Tata Motors telling me that they've been continuously investing in the back end, and they have a clear electric vehicle roadmap and strategy going forward. They're also telling me that, sort of countering the claims of certain manufacturers that Tata Motors will not be making money. They say that there is a clear line of sight as far as profitability is concerned.
Okay, all right, Ron, thanks very much for that. But the big menace of frauds in India's public sector banks is only getting bigger. After PNB, it is now State Bank of India that's been cheated by one of its borrowed. We learn from sources that the country's largest lender, State Bank of India, has filed a complaint with the CBI against Chennai-based firm Kanishk Gold Private for siphoning off funds worth over 800 crores. A lenders consortium of 14 banks led by SBI had extended credit to Kanishk Gold. SBI's complaint to CBI alleges siphoning of funds and now anomalies in sales and stocks as well.
All right, time now for a short break. Come back and we'll talk about the big IPO that opens today, ICICI Securities. More details on the other side.